Hello friends, welcome. Friends, today we are going to look at the RBI's monetary policy and especially on the comment of RBI Governor on inflation. As you guys already know that the the policy rates have been kept stable and the perception or the expectation that we had that the policy rate should go down in order to stimulate the market with cheaper loans, that didn't happen. And the key reason for that is inflation. And that is why in this video I am going to spend a lot of time. The full video is going to be dedicated on only inflation and what RBI governor said on inflation. Now you can read this para on inflation because this is a very important para, and that in this para RBI talks about what kind of opportunity RBI sees for the inflation to become stable and what risks that RBI sees that high food inflation going to result in a cascading effect on their headline inflation, which is currently at 5.08%, which is currently at 5.1%. So this is the risk also RBI has mentioned in the last para, saying that because of this we have to closely watch food inflation, which has become very significant, which is 46% of the CPI basket. So let's go line by line. Then only we will be able to appreciate the kind of risks that we have, that the inflation can play havoc in our ability to do a fiscal management and reduce interest rates going forward. Because this is very, very crucial. Though the core inflation is low, but food inflation is playing a very, very detrimental effect on our overall headline inflation, which has become very high. So let's read the first line. So which is point number 11, which says that headline inflation has edged up to 5.1% in the month of June, and because of higher than expected food inflation, and the fuel inflation remains in a deflation stage for 10th consecutive month, and the core inflation moderated to a historical low in the month of May and June. Now this, so let me just tell you why I'm doing this. Because the food inflation has a huge impact on the expected inflation of households. Now, what is expected inflation? Expected inflation is different from the actual inflation. Expected inflation means what kind of inflation that you see in coming month or years. That drives the overall behavior of the economy, the individuals who are contributing to the overall business. Now let's say if your expected inflation goes high, then what happens is that you would then accordingly tune your business and your cost in order to ensure that you are not getting any way deprived of a lower value because of constant the money value decreasing over a period of time. For example, a laborer will demand higher wages. The company will take into consideration for higher cost of inputs, and that could actually spill over on the headline inflation and to the core inflation. So that impact can persist for a longer period of time even when the food inflation goes down. This is the risk which RBI has pointed out in the last para. So if you look at this in the last para, it says that I think in the second last para it says that second and equally important is the reality that high food inflation adversely affects the household inflation expectation. This is I'm going to show you, right, by looking at the data, because you will be able to see the data. Then only the things get internalized, because just reading a para does not make any sense, right? Which have significant impact on the future trajectory of inflation. The household inflation expectation, after witnessing a moderate trend between May 2022 and September 2002, have edged up back on high food inflation since November 2023, right? So what RBI governor is saying, then he says persistently high food inflation and unanchored inflation expectation. This is household inflation expectation on various categories, which we are going to discuss in this video. If they materialize, it could lead to a spillover to core inflation through a pickup in wages and cost of living consideration, which I already discussed. This in turn could be passed on by firm in form of higher prices of services as well as goods, especially in the scenario of strong aggregate demand. Third, that this behavior changes can result in an overall inflation becoming sticky even after food inflation recedes. Can you see this? RBI governor has clearly spelled out the risk of the core inflation becoming sticky even when the food inflation recedes, because food inflation has a higher basket contribution to the overall core inflation, which is how much? Which is 46%, right? So let's look at these numbers closely so that we can internalize these numbers, because if the inflation does not go down, then it can have a detrimental effect on the overall economy, because the interest rates will stay high. That will not only make lending costlier but borrowing costlier, but it will also increase the outflow of interest payments of the government, which has been pegged to roughly around 9.73 lakh crores in this fiscal year, right, which has been slightly less than what was projected in the earlier February budget by 16,000 crores. But that is a huge risk, because as the interest payment increases, that puts a lot of pressure on our fiscal deficit. Okay, so let's go line by line. The first line is saying that the headline inflation edged up to 5.1%, and the fuel remain in a deflationary stage, and it also says that the food inflation is also very high, and it is 46% of the overall inflation, and vegetable has contributed significantly to the 35% of the inflation in the month of June. So let's look at these numbers, because that will give us a very good indication. So this is a tool which I have created, which is a web-based tool, and I'm going to share the link of this web-based tool to you so that you can play with this very easily, because it has got a lot of controls. You can run simulation, you can basically hold the simulation, and then work this tool by pressing this next button and the previous button. For example, if you see this number in the month of June, the inflation number for the main category, because there are two type of categories. One is the main category and another is a subcategory. You can basically select from this drop down menu. So you can see the headline inflation is what? 5.1%, which is actually 5.08%. So I have rounded up to 5.1%, which the RBI governor also did. Now, if you look at the food and beverages, right, which is 46% weight of the 100%, it has contributed to 8.4%, right? Now, 8.4% is what? Of how much is basically of the overall headline inflation, which he has said in his para. He's saying 75%. So how did 75% came? It came because you have to basically adjust this inflation against the weight of 46%, which is 3.88. So it is basically 383 basis point of the 508 basis point. So how much is it? It is 3.83 divided by 5.08, which is 76%, 75%. You see, so this is exactly what RBI governor has said in his speech. He's saying that if you look at this, say this 75%, it said food inflation with a weight of around 46% of the CPI basket contributed to around 76% of the headline inflation in the month of May and June, right? Now let's go a couple of months back so that you can see the trend, right? There are various way of visualizing this data, but I find this method very, very useful. As you will see that what you can do, you can not only do simulation, which will run automatically, but you can press the previous button and see what happened in the month of May. See, it was 4.8%, which is at 4.80%, and the food inflation was already high. It is still higher, 7.9%, and it increased to 8.4%. Can you see this? So it's very, very powerful way of looking at data, right? And you can go as back as how much? You can go as back as in the month of, let me just see what is the date till which this data is available. I myself have forgotten. January 2014, which is the start of the series. So let's go to the end, and then what we will do is just hold on. And then we will press the previous button, and we'll see how the inflation has changed over a period of time. So you see, May, the headline inflation was 4.8%, the food and beverage inflation was 7.9%, and then if you see, there's the fuel and light. He said that the fuel and light inflation is actually in a deflationary stage for so many months, for I think 6 months, he said that. See, it is minus 3.7%, and the weight is around 6.84 percent of the 100%. So it is not very significant compared to what food inflation is, which is 46%. So let's understand how important food inflation is as far as India's economy is concerned. Let's go 1 month back to April. So you see it was deflationary. The core inflation, the fuel and light was minus 4.4%. The food and beverages still stayed around 7.9%, and the general index was 4.83%. It remained around 4.8%. Let's go one step backward. So here also you will see that it remained in 4.8%, the food inflation remained constantly high, and the fuel and light remain in a deflationary stage. So if you go to the month of March, you will see the same result. So you will see persistently the food and beverage inflation has been high in the benchmark of around 75%, right, roughly. So here also you see in the month of November, and the fuel and light, and when the food inflation went down, let's look at the which is very significant, and I am going to basically give you a reference and parallel reference on how these food inflation numbers impact the household's expected inflation. That is very, very crucial to understand, because expected inflation, as I told you, has a huge impact on the overall economy because of the impact and the spillover impact on goods and services, which RBI Governor himself had said. Now, if you look at the food inflation has in the month of October was 6.3%, and now if you take it backwards, it is still in 6.3%, and then if you see, it will sharply go down, in the month of, let me just see which month it actually went down. You see, June, it has gone down to 4.7%, and then it actually went to 3.4% in the month of May. Now let's look at this. This is going to be very interesting. This month of May 2023, and let's go to a different chart to find the linkage between the household inflation data which the RBI has shared with this core inflation, which is the food inflation data, and how it impacts the household expected inflation, right? So let's look at that. So here is the chart of the food product RBI inflation product wise, and we will basically select other products also. So let's look at the month of May, July and September, because this is bi-monthly, right? So what do you see? It says that food product, what is this number? This is basically the number of respondents. 64.6% of respondents in the month of May said that the prices will increase more than the current rate, 1 year forward. So it is saying product wise 1 year forward, right? So this is how you have to read it, and the time scale is monthly. So it is saying in the month of May, it is 64.6% of the respondents said that food inflation is going to be high. But as soon as the May data was out, so if you see that the May month data was available on food and beverages, because let me just go one step backward to see what was the inflation in the month of April. See, it was higher because it's bi-monthly. It was 5.1%, right? The food inflation in the month of March. And now let's go here and see month of March. Then the 63.7% of the household said that the food inflation is going to be, price will increase more than the current rate. But in the month of May, just because in the month of March the core inflation, the food inflation was higher, the expected inflation went high 1 year ahead, right? And then it fell, and in September 2023, the number of respondents, which basically said that the prices will increase more than the current rate, fell drastically to 57.9%, and which we can clearly see from this data. So let's go in forward. You see that, you remember this date. Let me just go again and remember this date. This date was what? September 2023, right, for food inflation. So let's go again and let's look at this data. So September, so we are in March 2023, and let's go one step forward. Then we are in April 2023, it increased to 4.2%, and then May 2023 it went down, right? See, it went down to 3.4%, and then it increased to 4, because if you look at this data, This data is bi-monthly data, not this. This data is bi-monthly. So in the month of May, the number went down. So that's why the expected inflation actually went down to this level, right? Because in the May month, if you look at the May month data, and let me show you the May month data again. So let's go to previous. So if you see that the May month data is 3.4%, right? So that actually has a huge impact on expected inflation. This is exactly what the RBI governor is saying. By reading this para will not give you that insight. It is always important to look at data, because then only the whole thing gets internalized in your mind. Then you understand that how Indian economy is behaving, because understanding macroeconomic is very, very important. So what he is saying, let's look at this. What basically he's basically talking about the household inflation. This is the line which we have to read again. He's saying second and equally important is the reality that high food inflation adversely affects the household inflation expectation, which has a significant impact on future trajectory of inflation. The household inflation expectation, after witnessing a moderate trend between May 2022 and September 2023. Again, let's go there. So what it is saying, May 2022, right, and September 2023. So this is what he's saying, moderate. I don't think we can call it moderate, because let's look at the overall inflation, because we're looking at only food product. So let's look at the general household inflation. Maybe that data must be more. Yeah. So he might be saying that, what did he say? Let's go again. He's saying that the household inflation data, here is the, he's saying that has witnessed a moderate trend between May 2022 and September 2023. He's saying moderate. So let's look at again whether it was moderate. The pricing will be increased more than the current rate, and option is general, means everything. So May 2022 and September 2023, probably yes, because it was kind of undulating. It was kind of not stable. It was volatile. So you can say that if you consider this time frame, right, as a window and don't look at the middle numbers, so you can basically see that the number actually dropped from 70.8% to 62.2%. So he's right from that perspective, but there was a lot of volatility in between, right? But the risk is that because of the higher food inflation, you see the expected inflation in the month of July 1 year, product wise 1 year ahead has increased, and this is the risk which RBI governor is letting us know that, look, this overall expected inflation, which is 68.6% of the overall respondents, is saying that the prices will increase more than the current rate for products 1 year ahead from now, right? From today, 1 year ahead, the prices are going to increase more. So this impacts the overall economy from the point of view of behavior, and that can have a spillover impact on the overall core inflation, even though overall headline inflation, even though food inflation has gone down or will go down in future, as the RBI governor is expecting. So here you will see that what he is saying that okay, so let's look at one or two important things which he has mentioned in this particular para. He's saying that vegetable prices have increased sharply and contributed to around 35% of the overall inflation in June. What does this mean? Let's look at this data again, and which will give us a very good insight. So what he's saying, vegetables. So let's, for understanding vegetable, I have to basically go to subcategory, because subcategory is going to give us vegetable, because otherwise main category does not have it is not broken down into subcategories. So look at this vegetable, and vegetable we will go to the end of the time scale. So how do I go to the end of the time scale? I'll just pull this bar and I'll take this to end of the time scale, and then from there we'll go back. So you see, what is the vegetable inflation now? The vegetable inflation that we have today is 29.3%, which is in the month of June 2024. He's saying it is 35% of the headline inflation, right? So let's do the calculation. Look at this number, 1.77 means 177 basis point, which is, how do I calculate this? I calculate this by taking the weight here, 6.04 of the total 100. So it comes out to be, because the inflation is very high, it's a weighted number, it's 177. So I'll divide 1.77 divided by 5.08. You see, it comes out to be 35%. This is how you read the number. And these numbers are actually not made available in the form which I have shown it here. This is the only place you will find this number calculated in this manner, not in any of the RBI website or any of the data which RBI declares. So you can actually see how the weights, how these numbers will change over a period of time, because this is calculated on a weighted average, and that's why this tool is so important, right? Because some of the things which you will be able to see, which may not have been written in the document, in the MPC minutes document, because maybe they want to project a picture and they don't want to scare anybody, though there is a need to be realistic. But by looking at this data and seeing this data on individual line items, it gives us a very good understanding how the picture is going to change. Now he did mention about milk product prices. If you look at this para, he talked about two important risks that will continue to persist: high food inflation, and he basically said that I'll just see where the mention of milk is there. There was a mention of milk there somewhere. Just let me do the following. Let me pause it here, otherwise I'll be wasting your time. So here is the milk. So if you look at this milk, what he's saying that that high food momentum is likely to have a will continue in the month of July, largely favorable base effects. However, push headline inflation towards July, the impact of revised milk prices and mobile tariff needs to be watched. So why milk is very important? Let's look at this again. So if you go here and let's look at the how milk is going to behave going forward in future. So milk products have a weight of 6.61 percent of the overall 100%. Oh, my pen. Okay, just a minute. So this is the milk product, which is a weight of 6.61 of the overall 100. So what is the inflation that we are seeing today in milk, which is 3%, right? So let's see how milk has behaved over a period of time. It's the month of June 2024. So I think we are in the end of the time series. Let's go behind. So if you go behind, you'll see that May, the milk was 2.6%, right? The inflation on milk was 2.6%. If you go in the month of April, it was 3%. So it is kind of hovering within that particular time, but 3.4%. So there has been revision in milk prices. So what he is basically saying that yes, currently the milk prices inflation is not that high. It may not be that significantly high compared to what we saw in past, but there is definitely a risk of this value going higher, which currently is 20 basis point of the total headline inflation of 5.08, right? And then he talks about the mobile tariff increase. Now, which category the mobile tariff is going to fall? Because we don't have a specific category which will define mobile tariff. So you have to figure out where mobile tariff can be plugged in here. It is not going to be in the category of footwear, housing, fuel and light, household goods and service, maybe here, household good and service, or in transport or communication. Now, if it is household good and services, then the weight is 3.8% of the 100%. If it is transport and communication, then the weight is 8.59%. Now, if the transport and communication inflation, which is currently at 1%, in the month of June 2024, if this increases, then we have to see that how much basis point, because of the larger weight of 8.59%. Because if you see, the vegetable weight is 6.04%, and because the inflation is so high, it contributed to around 35% of the overall headline inflation. So depending upon what kind of impact that we see, maybe it is not in this particular category, I don't know, but it has to be in some category and it might have an impact. How much impact is going to have on mobile traffic, I can't say, but I don't think that that impact is going to be that significant, because it is going to be a sub part of one category, but it will have an impact. So if this item has an impact and the milk prices has an impact and the vegetable prices continues to stay high, we are going to be in a huge risk of having a higher headline inflation. But one good thing is that because the Reserve Bank of India might have a better visibility than me as a private citizen, I don't have the numbers, I can only talk about the numbers which I see. One good thing which RBI Governor has done is he has made a projection of the headline inflation for the whole financial year of 24-25, which is 4.5%. So that is the projection, and he's saying that because in this current quarter it is 4.9%, because though it is 5.1% in the month of June, but in the earlier month it was lower in 4.8%. So it kind of became an average 4.9%. But he's predicting that in Q2 it will be 4.4%, then in Q3 it will be 4.3%, and then the overall expectation for the whole financial year is 4.4%, not anything below 4%, means you are still going to see an inflation which is above the window of inflation management which RBI is targeting, which is 2 to 4%. So this is definitely not a very good scenario. Though it is controlled, it is slightly higher than 4%. But if the food inflation continues to remain high, coupled with other factors which we just spoke about in this video, then this particular line item 17 and 18 will become very relevant. Then we will see a perpetual rate stabilization in India, and the rate decrease from the current level of 6.5% will be little hard. It will be a little hard, and I don't expect the rate to decrease. But there could be one opportunity that if the US decreases rate, then it might be possible that in spite of high headline inflation that we'll still have to pull down the rates. Maybe we may have an opportunity to pull down the rates, because there is a slight kind of linkage between the US Fed rates and the Indian rates to maintain the balance of foreign exchange inflow and outflow. Otherwise, what will happen if there is too much imbalances, then there will be either huge inflow or huge outflow. That balance has to be maintained, right? So, friends, I think you probably understood, and I hope that I have able to do justice to this video, because there are many things to talk about. I actually had many more charts which I could have discussed, but I can't discuss everything in one short window of time. So you guys let me know anything specific that you want me to touch upon in this subject. I have view graphs of all the surveys which RBI has done, and I've created all these dashboards, and I can take you through some specific dashboards and go deeper into that subject. Thank you very much, friends, for your time. I'll come back to you with a new video next time. Thank you very much.